Hey from Auckland, it's the We Fucking Love Startups podcast, and I'm your host, Troy Hammond. On today's episode, we're chatting with Charlie Meaden. Charlie is the co-founder and CEO of Gembot, which is an AI automation investment technology. It's a pretty exciting time for investment technologies. We chatted with Brooke from Sharesies last week, and so I really wanted to get Charlie on and talk about his new thing that he's building because he's looking at things from a different way. He's democratizing the brokerage system a little bit. He's building a wealth management platform that can help you with strategies and execution of those strategies. And so really excited by this chat, a little bit nervous because there's some really interesting stuff. I read a blog that he wrote last night in 2021, which has pretty much predicted the exact markets of where we are now. And so hopefully I can pull out some information from him that can help us all. It is not investment strategy. None of this is financial advice, just a disclaimer, even though I may try and ask a few questions just to be able to pull out my curiosity. We make sure that we disclaim that this is not going to be financial advice. It's mostly and hopefully going to be really interesting conversations around technology. Hope you enjoy.
Kia ora. Thanks for tuning into the We Fucking Love Startups podcast, brought to you by Talent Army.
Have you done much in terms of marketing to get your name out there yet, or is it just?
Really, it's an interesting one, right? Because you're trying to figure out what the right balance is with these things. And when I produce content at the moment, it's focused on how do I add value or to myself or to the community of people that we're trying to obviously engage with.
Yeah.
And I've done a bit of work with podcasts, but really thinking about markets and talking about different theses we had within our strategy that we run.
Yeah.
So any kind of outbound stuff for the last, couple of years has been around more kind of a view on the market or a view on kind of, investing in general rather than, building technology and some of the real work that we've been doing behind the scenes.
Is that because you've been interested in it, or you're starting to educate your audience on the credibility of information that you have?
Howard Marks is a really famous investor and he writes these memos.
Yeah.
And, he said for the first, I think it was like 10 or 15 years, no one read them, no one talked about them, and it didn't matter.
Yeah.
And, from a memo perspective, which I like to write from time to time, when it seems relevant and it seems like it's kind of grounded in some real kind of edge, I guess.
Yeah.
Then I like to write.
You write well, man. I read your Medium article last night at about, what time did we get back from dinner, Jono? About 9:30 at night. And I started reading that and I read every fucking word, man. Like it was intellectual, it was nuanced, it was like, you could see that you'd taken some time and effort to actually tie things back, and it was pretty ahead of what's happening right now, right?
Yeah,
like I was
2021.
Yeah, I was reading it going, holy fucking shit, man. Was a crystal ball involved here, or?
I mean, I'm a massive fan of history and reading history and trying to get my view from as many different people as possible. And I like to have the approach of I want to eat with as many different types of people as I can and garner their wisdom to help me inform my own wisdom.
Yeah.
Right. And I think that there's a trap of getting kind of too invested into one ideology or one sort of view that, you kind of end up too focused on one specific thing and then you're not seeing the bigger picture.
Yeah.
So
you're not evolving, right? You're not thinking, you're not growing. You're just binary in your little world.
Yeah. So you've always got to be open to, new thoughts and how things develop. So kind of getting a view from as many different areas I can, I think that gives at least me an edge to navigate what I believe to be kind of productive in terms of allocating, whether it be my time, my capital, or of course computational resource, and allocating computation is obviously now such a big thing in our world. And we do it every day, unknowingly,
Yeah.
So, I kind of try to think of productivity. How can I get the most gains out of whatever I'm doing?
Yeah.
In terms of using time, computation, and capital. So,
let's go back a little bit before we go there.
For sure.
So people are seeing this podcast and they're like, okay, Troy, who the fuck's Charlie, and what does he do?
Yeah.
Can you give them a bit of an elevator picture of who you are, where you've come from, and what you do?
Yeah, sure. I guess, yeah, obviously I'm Charlie.
Yeah.
And I have been interested and fascinated by technology and markets for a very long time. Really getting involved in technology when I was playing video games professionally, and that's where I originally got a passion for specifically technology. And professionally, while I was doing that, I did an apprenticeship as a goldsmith, and I worked in the jewelry manufacturing industry for, I think it was about 9 years all up. And that really gave me the ability to invest in my gaming, invest in technology, and investing in learning about technology and learning to program. And I used what I learned from jewelry manufacturing around systems, because jewelry manufacturing is just you're building systems to create physical objects. Whereas now I'm using programming to create bits, digital objects, and how they move around and they work. So I learned a lot from jewelry manufacturing on optimization and, where you get to different bottlenecks, what's good to actually do manually and, not scalably. And just the way the industry works, you can work for yourself as a sole trader. And if you've got a good client base, you can do quite well. And that gave me the freedom when I was younger to then learn to program and to really invest in esports and gaming, which led me to my first startup that I created. But previous to that, it also led me to my first startup job, which was building a couple of platforms for gamifying recycling.
Gamifying recycling.
Yeah. And I came to New Zealand a decade ago, but I had spent some time in Auckland. I went to Auckland Grammar for a while when I was 15, but from the UK. Got into startups, got into building Uproar, which was my first startup. We got acqui-hired after a couple of years.
What was Uproar quickly?
So there's some similarities between what we're doing now, technically, but obviously completely different industry. So it was essentially a reward platform and tournament platform for esports and gaming. So we ran tournaments and competitions for different games, and we also allowed users to connect their game accounts and then do challenges and quests to earn a digital currency. Then with that digital currency, they could basically buy headsets, game currencies, all sorts of different things. And we built that to, I think it was like 400 and something thousand users over about an 18-month period.
Not bad for your first startup, mate.
It wasn't bad. Obviously, I know so much more now. I think about all the things that we could have done differently to, be in a different position. But it was an okay. It was not the outcome that we envisioned. But obviously, it was a very beneficial experience to go through. We got acqui-hired into another company that we worked at for a while, and then I exited with, Gembot and starting to build that.
So Gembot then. So what is Gembot?
So Gembot is basically your AI investment assistant and modern wealth platform. So you can connect brokerage accounts or use our brokerage account to then manage your wealth, automating and augmenting AI into that process. So how do you bring automation and AI into your wealth generation strategy of, in your life, whether that's investing in, collectibles, publicly traded equities, funds even, and so on. But there's a whole lot of literacy and there's a whole lot of depth that you can get into with that users may not have access to.
And so that I've heard you say that you're trying to digitize the Berkshire Hathaway fund, right? And so
so the Berkshire V2, or what would Berkshire be if it was built with a lens of automation, AI, and productivity? Like deflationary forces, essentially. And our specialty is bits, whereas Berkshire has been in, obviously they own a lot of public equities, Apple, Occidental, all sorts of public entities, but they also have their insurance businesses that they own wholly. A lot of what Berkshire has done and their success comes from their insurance businesses. If banking in the US didn't get regulated, now they actually might be more heavily involved in banking today than they are. So they actually discussed that if there wasn't regulation in the US basically stopping them from buying banks, they'd probably be in the banking business now. And potentially you'd have a better banking system, at least at a regional level. But because of the regulation, they essentially doubled down on insurance, which makes sense. We want to, I guess, take their approaches and what they've learned from insurance and apply that to technology, automation, AI, and basically productivity in general.
Yeah, cool. So this personal timing, right? Because last week's episode was Brooke Roberts from Sharesies, right? And then you're like the same week, I'm getting chatted to you. So if I'm trying to tell, or if the audience listening to this is like, okay, well, what's the difference between Gembot and Sharesies? How would you describe that?
Yeah, so primarily Sharesies is a brokerage service. The way they innovate is by bringing you products to the market that allow you to allocate resource, AUM, your cash or whatever. So, they're innovating it at the moment, right? Trying to do the KiwiSaver, the self-directed KiwiSaver account. That's where they're innovating. They've also got a high savings account that I believe that they've released and is in kind of early access at the moment with a really good yield. We don't innovate too much there. Now we've got Gem Broker, which is our brokerage offering, our commission-free trading for US equities, ETFs, and crypto.
Yeah.
That is similar to Sharesies, but obviously the assets that we offer are narrow and different to Sharesies.
Yeah.
When you think about Gembot, that's actually connecting these accounts to an interface that allows you to basically allocate more efficiently and understand risk, basically make, in theory, better decisions and get better outcomes. So Gembot's an ecosystem that will connect to different parts of how you build wealth and give you the best outcome for the lowest cost, essentially.
Yeah. And so for those listening to that is, so essentially with a robot platform, right? Like you're getting to look at algorithms, automations, advice, questions and the likes that you can bring into that rather than someone just being on Sharesies and looking at, like, if my kids go into Sharesies, right? They're probably just looking at the logos, of who they want to buy on, and they're making investments off the logos.
Yeah, so we have far more depth of information on individual equities in the platform because we're providing that information. That's obviously part of how we operate and what we're trying to do with our product. But it's only one part of your portfolio, right? Your Sharesies account is one part. What about your income? What about your Binance account or your Easy Crypto account or whatever other accounts you have? How do you operate across 3 to 5 different, kind of accounts and bring that all together in a aware manner? Like if you connect your banks, your Sharesies, your Gem Broker account, and I don't know, your KiwiSaver, like I want to know insights about my whole net worth and all of these areas rather than just, okay, this is my Sharesies lens. Our system over time may be able to say, well, you might be best to actually allocate through certain brokerages for certain different things because there might be a benefit. There might be a quantitative benefit to doing that. It might be as, just alerting you that, these are the fees you're paying across these different accounts.
Yeah.
So it's really about giving the user like the information and then kind of context around that information.
Yeah. So I guess when you talk about your net wealth and likes, what sort of net wealth are you looking for in terms of your users? Is there a like minimum or like, so I was having dinner with someone last night at a big, actually I won't say the company, but
Sure.
He was like, like we only sort of engage with people that are really looking to, invest $1 to $10 million, and that's sort of our space. And he said some of them are like hundreds of millions of dollars, but if you haven't got $1 million you could lose tomorrow, don't bother coming to us. And so
so I mean the good thing about our business and all the activities that I do personally is that I've kind of got a broad range of that kind of context, right? So from our strategy perspective, that's trying to generate alpha, whereas with the platform we see there's benefits for users that are needing that little push, that little bit of extra context and conviction to make their first investments.
Yeah.
But we also recognize that with the Gembot platform, it's, instead of Netflix where you get one subscription and everyone gets the same service, one user can come in and get like a leaf and the other person comes in and gets, I don't know, a Hummer. And that, what I mean by that is we can see value for the entry level user, and we're focused on user experience to make the overall platform as easy to use as possible.
Yeah.
But our core users, where they're going to get really great value, is those users that are taking their allocation of their assets really seriously, and they're regularly contributing, and they probably have over $50,000 invested.
Sure.
But our objective is, of course, to democratize access to the tools specifically and different investment types.
Yeah, because there is a lot of people out there, right? And I mean, I have more than $50,000 invested, right? And would I say that I understand like deep investment strategy? Absolutely not, right? Like, so I try and learn as much as I can, but I don't have time, and so it's I'm always rushing around and trying to figure something out, and then I end up making a decision based off gut feel versus like analysis.
We get that a lot with our users. So we hear a lot of things, and during the kind of early access phase and through user interviews and stuff, obviously we're a product-led business with hyper focused on the user and what can we actually give the user. And we hear a lot of, if only I stuck to my rules, if only I pulled the trigger, if only I had kind of done the executional part of the idea or trade or investment plan I had, then I would actually have potentially done it. And then, of course, you get the other part of it, which is ideation of strategies, ideation of what should I invest in? What does the future look like ultimately? And where do I want different parts of my net asset value, my wealth, my net worth? Like, where do I want to allocate?
Yeah. So break that down for me. So how does Gembot then help for people listening to this to say, all right, well, first and foremost, right, so continue with my plan, invest in my strategy. That's quite pertinent in a down market, right? People are like, oh, do I hold? What do I do? Do I sell off and the likes? And so how does Gembot help with that? And then secondly, how does Gembot help with people to try and create a strategy?
Yeah. So I guess first of all, so we have this kind of concept internally of these 4 pillars, which investors, where areas where, our product should help. So anything we build internally for the platform should benefit one of these 4 pillars. And those 4 pillars are your net worth, so your overarching view of your what assets you own, what liabilities you have, and what your income is and what you're contributing. And then we have discovery. So how do we help users discover different funds, different assets, different strategies, potentially just general information that will help them either come up with their own strategies or use another product that can help them fulfill a part of their overall net worth. And then you have our AI assistant, which is really trying to help you and give you conviction. Yeah. So where you may not be sure on something, you can ask questions. Maybe in the future when you need to then escalate that to a professional, then we'll have that functionality on the site where you can actually get the right professional to then touch base with you.
Yeah. What sort of personalization does the AI assistant give? So is it quite personalized, or is it?
Yeah, the objective is to be absolutely personalized from a quantitative perspective. So I've got your net worth. I understand where all the money is. I understand what the expenses are across these accounts. I then understand the user's goals, and I have good information, as in good financial information that's accurate. Yeah. Obviously, if you ask these generative AI models, lots and lots of questions, that data may not be kosher. Yeah. And it's very important, and we should, probably spend some time on this, is around what does that mean from a kind of regulatory standpoint, and what does it mean from a product standpoint when, people are building products on this, and how do they disclose, well, this is how it's prompted. This is the information and context it has. Where
does this data come from, right? So you're building this bot now. Yep. Where have you got the data from?
So we've got it obviously from a number of different areas, and it's going to expand. So, right now it's very early days. Yeah. And we're going to, lean on our customers to be like, okay, look, I really need this. You guys have built this. It's kind of working, but actually I need, X feature because that's really a pain point for me. That's costing me time, perhaps, or it's costing me money. Yeah. Or I just can't comprehend crunching those numbers. So that's kind of computation, capital, and time again, right? Sorry, can you repeat the question?
So the data that you've got on your platform now.
That's right. Yeah. So at the moment we have personal kind of net worth information based on your current accounts with us, which is very limited. We have our own brokerage, Gem Broker, and we have Alpaca right now. We're in the process of adding 30 more. And we also have on our roadmap to add bank accounts, property, and investment accounts, essentially.
Yeah, awesome.
So that's one part. That's kind of your quantitative net worth.
Yeah.
Then there's a number of other areas which we look for. So, your personal goals. How, what are you trying to do from this? What are we doing when we're actually investing? Are we just being told to invest, right? But with no outcome in mind? Like, I think, everyone should have like an outcome and a goal in mind, because otherwise, why are we doing it?
Yeah, indeed.
Then clean data, clean financial data, clean data about assets, specific funds potentially in the future, and so on. Right, that's specific to us. We have a data lake with over 26 million data points in it. Mm-hmm. And then you have the model, whether it be GPT or another model actually in the future. So the way we've built this is so it's an open ecosystem.
Yeah.
We want to be able to create a situation where you can kind of choose. And we think that that's where AI is going, and where kind of, automation and these things are going is, you want freedom over, do I use the Twitter algorithm, or do I just want to see what the followers I'm following is, right? So in terms of a cultural perspective, from what we believe to be like good for the world, is being able to democratize. And what does democratize mean? It means, or what does it encompass? It encompasses being open. So we don't want to, put everyone just into our brokerage system, because we think that there are lots of other services out there that would fit specific users better than maybe ours.
Yeah.
So
that's not how traditional investment brokerage services work, mate.
So so I'm not a traditional finance person, and our team isn't. We're, I guess, focused on technology and from a development lens, but when we started this with a single strategy that we've been running since 2019 now.
Yeah. And
we were like, okay, if we had a fund or a strategy, like how could we do everything completely opposite to, the traditional kind of financial situation? Yeah. So we're like, well, we wouldn't have any management fees. We'd be performance only. We wouldn't go after market returns, because there's ETFs that you can buy for free. Mm-hmm. So, and we'll make it hyper liquid. So rather than, a hedge fund where you might be stuck in there for 2 years, like how do we get you your money in a week? So anything we do, we're like, how do we make it as customer centric as possible? And we think from the platform perspective, it's obviously openness is a big part of that.
Did you think about this in a way from democratizing the norm, or was it around, because there is connotations with investment technology, right? That there's like rug pulls and dodginess, and so when, if I find myself on YouTube late at night, which I usually do, and watching CoffeeZilla or someone, right, I'm like, oh, here we go. Who's he going to talk about now? And so if I was building something in this space, I would have to be very open in terms of who we are, why we are, what we're doing, and trying to be as transparent as possible.
Yeah, for sure. And I think the cool thing about what I love about markets is, I can take a position on a specific asset, and you can at exactly the same time, and we can both make money.
Yeah.
So because it's such a personal and subjective kind of arena where, time plays a big role, what you buy, position sizing.
Can you give us an example of a position you've taken, over the last couple of years yourself? Is there anything that you can talk to?
Yeah, I mean, I can talk about, a win or a loss. We had an interesting one, a really interesting one, frustrating, one of the most frustrating trades I've ever been in. It was around 2021 when I wrote that memo, and I decided to short Solana. Solana had gone from $16 to 200 and something. Yeah. And I was like, look, I'm basically going to risk $50,000 here. And I'm sure that the market has basically got ahead of the fundamentals. And that's our strategy, by the way, is to basically find where it's called the Meaden reflexive strategy. Mm-hmm. And it's all about reflexivity. So George Soros has like 5 hours of this on YouTube. Yeah. It's all about where expectations basically disconnect from reality. And I was like, this thing's gone from $16 to 200 and something dollars. Like this is a disaster waiting to happen. This isn't even decentralized. And also, how is this guy, Sam Bankman-Fried at the time, I was like, how is he thriving? Like, he should be getting wrecked right now. That's what I was like. I was like, this doesn't make sense.
I don't know how you he came out so good for so long, and
Well,
even with the lies, afterwards. But yeah,
And so I was like, okay, I'm gonna short this thing 5x levered. I'm gonna basically put up $50,000, and if I'm wrong, I'm gonna lick my wounds and move on to the next trade.
just quickly, but to put a pin in that and say, for people that don't understand what the short and long situation is, right? Can you explain that really quickly before you go any further?
Yeah, it's really simple. Short selling is extremely volatile, right? And I'm not recommending anyone go and do that, but it is interesting to learn about what it means, what the technical aspect of it is. But it's essentially you get to sell before you buy.
Yeah.
So if I think that a specific asset is massively overvalued today and I haven't bought it, I've not enjoyed any of that upside, I can choose to sell it today and then I can buy it back later and close that trade. So it's very simple. I want to sell today. I think selling today makes sense to me. This seems like very expensive.
This is so high, I'm going to sell now and then buy it back at a much lower cost once it falls. Yeah.
So that's really it. It's just the inverse, right? Like you buy, you expect it to go up or you hope for it to go up, and it's not going to go in a specific direction necessarily.
Yeah.
So essentially, I think this thing is extremely, expensive. I believe that I'll be able to buy it later for cheaper. I'm going to sell it today.
Yeah. And so you shorted
Solana. Yeah. So again, it's all about your rules, right? So we had,
because I don't think anyone was fucking shorting Solana back in the day, right? Like it was like a mad gold rush. People thought.
Yeah. I mean, I don't know who did, but we had a thesis on it, and we had shorted it previously as well and done quite well when Elon went on Saturday Night Live.
Yeah.
And we shorted Bitcoin as well at that time, and it was really great because it was kind of like everyone expected him to go on Saturday Night Live and talk about Bitcoin, whereas he we talked about what he's really passionate about, which is going to space and electrification. Anyway, so with the Solana short, so I'm like, okay, I'm going to risk $50,000 here. I believe that this is a really strong trade. The market is like really overestimating where we're at. So we put the trade on, and it was getting to that point. I was about $45,000 down, and the price was around that 250, and I think it went to 262 or something. I can't remember the specific number, but we got liquidated within like $5 of the top, and I don't know what price it is now. Maybe we can find out what the price is now.
Yeah.
But it was 5x levered. I think I did some very light math on what the position could have been worth, and it was significant. But we had our rule.
Light math, or you knew to the exact.
No, I didn't want to know. Once I'm out of the trade, I kind of that's it for me on that one. So, but we didn't. We decided not to keep servicing that trade, and obviously, in hindsight, if we serviced the trade for another $25,000 kind of margin of error, we'd have cleaned up on that trade. But at the end of the day, we decided that was the amount of money we were willing to risk.
Oh, that's good. And what's been the one that you've been the most success?
So recently it was the banking short that we did. So we have some really kind of strong views on the banking sector and specifically Australian banks. And I did a podcast on it a couple of months ago, I believe, and that was talking about the trade before it happened. And essentially, banks always make a lot of money just before they have problems. Specifically in regimes where interest rates change and basically liquidity gets drawn out of the market. So my memo that I wrote and you read, that obviously talks about how when liquidity tightens, the market is essentially forced into a situation where they have to be sellers because they're over-levered, specifically the banks as well, right? Like if you buy a bank and they have a run on the bank, then that is really volatile. Whereas if you get a business that has a bunch of money on their balance sheet, they've got no debt, they're kind of just like a SaaS business. It will take time for that business to fail. Yeah. Whereas like an institution like a bank can just fail overnight.
Yeah, we've seen it, right? We've seen it recently with SVB and others.
And if these Australian banks and the American ones as well, if they were to mark their bonds to market, they would all be insolvent.
Yeah.
Well, they've been in negative equity. So if there's a reason that they are forced to sell those bonds and realize those losses, mark those bonds to market, then that's when they're going to have issues. And typically, leading up to that, they make a lot of money because they can loan a lot. They can loan a lot. They get a lot of interest. They're doing a lot of business. Now, obviously, you're seeing a retreat, and liquidity is drying up. And you know how like investors go, oh, you should always buy at the bottom. You know, was it buy low, sell high, right?
Yeah.
The problem is the way the mechanics of markets work. When you want to buy, typically your liquidity is being drawn away from you, so you actually are unable to, even if you want to. So positioning yourself to, obviously, for that not to happen is extremely difficult.
Mm-hmm. And so I guess that's really interesting, right? And so what advice would you give for people out there that are like, what I think the term's retail investors, right? Let's just say everyday investors or early investors, early stage. What would you say to them now if they're in this market, right, and they're thinking about, well, have I missed the boat? Was the last 3 years of gold rush over, or is this now still a good time to invest?
Well, that's it. Yeah. So I like to stick clear of any advice on specifics, but I think.
Well, in terms of the investment strategy? If we talk about it in terms of a strategy, does the strategy change this year now in the current economic situation than it did 2 years ago?
Yeah. So I guess for us it has.
Yeah.
Interest rates play a big part in this, and also how we're a lot of our strategy is about the psychology of the investor and the participants that are investing. And the technical nature of liquidity, right? How much liquidity do people have to put to work? I would say you want to try and come up with a very solid framework for what's going to work for your situation. And then you want to execute on that, being as well informed as you can.
Yeah.
So if I have a strategy, let's say, to allocate X amount of dollars to my KiwiSaver, and then I'm going to have some self-directed stuff on the side. I'm going to work out, what am I trying to do? Am I trying to get capital gains? Am I trying to get dividend payouts? Like, what am I trying to do? Am I trying to split that in half? Do I have some where I'm trying to actually get some capital gains and take a bit of a punt on individual companies? Or is that not for me? And actually, I just want to accumulate a very generic ETF and kind of allocate and forget about it. I guess it depends on that individual investors. And we call them independent investors because we believe that retail has become a bit of a slur.
Yeah, that sounds a lot better. I like that better.
Yeah. So independent, self-directed investors, we are all independent. We're all investors because we're all investing our time, capital, or, computation in some sense, right?
Yeah.
So we're all investors. How do we do that? And I think one thing that I would like to see change, or a perspective change, is, we're all, at the end of the day, people that have been on the planet for X amount of years, where it's 30 years for these financial professionals, right?
Yeah.
Where is the edge? And, does an engineer that's working at zero, that is well learned and understands, data lakes and data structures and the future of, data, do they have a insight and an edge over a financial professional working at Goldman? I don't know. So individual experiences and your own insights could create an edge in specific areas. And I think that, oh, well, I'm a financial professional, so I am somehow superior to, to anyone else, is kind of
naive,
potentially not true, depending on the context and the perspective, right? And that's not to say that financial professionals, are not appropriate or kind of somehow obsolete. They're absolutely not obsolete. They're absolutely needed. But to kind of take this blanket view, professional versus retail or independent investor, there's some sort of edge here, guaranteed. I think the fact that the perspective of it being guaranteed is maybe wrong.
Yeah, interesting time we live in. I think what I'm keen to ask you, right? So when I think about what you're doing and what a bunch of others are doing, is the emergence of AI has really just been obscene in the last 6 to 12 months. And so Do you think that your products, like if we're looking at your products versus a whole floor at Goldman Sachs, right? Is that going to enable them to do their jobs better? Is that going to take from their market share? What do you think these products are going to do to the industries that they're born out of?
Well, they're all nodes, right? They're all agents, right? So I do think that I'm very confident that over the next 3 years, like an individual could have like really strong operational execution within their strategies and run multiple strategies, which could be comparable to a multi-person, fund in the future. I think that is possible. Now, are the returns going to be better? I don't know. But in terms of like operational excellence and ability to execute across multiple different asset types and strategies and manage risk across those, utilizing and augmenting that with AI and automation, absolutely that is possible.
In when are you thinking?
I mean, I think in the next 12 months we could be really adding a lot of value. Like internally we use it. So
you put your own money on the platform?
We have the same problem of we have 5 brokerage accounts across our strategy. So how do we solve that internally? Well, we have a bunch of automation built that builds our kind of view of our book.
Yeah.
And Gembot will take that, what we've done internally will eventually override that and kind of be the end solution. Yeah. So I guess we have some of these same problems where how do you allocate effectively and manage risk across 5 accounts? Because you need those 5 accounts because you don't have a prime broker. Yeah. You don't have a relationship with Goldman or you don't have a relationship with JP Morgan and you want to allocate quickly and efficiently over multiple assets. Then that's an example of kind of improving that execution and that operational perspective for an independent investor that is currently obviously not so available.
Yeah. What's the landscape or the size of the independent investors in New Zealand? Has it improved or has it increased because of the platforms like Sharesies and Hatch and Co?
Yeah, for sure. I mean, Sharesies has, really kind of opened the eyes of many people and like AI now and AI, the ChatGPT specifically really has opened up has kind of unlocked creativity in our minds, right?
Yeah.
More consumers now have a view and a thinking, like a light bulb moment's going off in everyone's minds on, this is how I can use it. But the fundamental technology behind it has been around for a while. It's just that the interface that has unlocked this creativity happened to be a chat thing, right? So absolutely, like giving access for people to trade assets is a fundamental part of unlocking and democratizing that access. That's not so much where we're focused, whereas we're focused on how do you bring that together and how do you allocate.
And so you mentioned that your platform obviously is not just that. And so I guess what is different then? What are you talking about in terms of the markets that you're across?
So I guess the way we're building the business and the markets we're kind of going after first is the US, Australia, and the US, and New Zealand.
Yeah.
And there's over 100 million people that have independent accounts, and obviously that's really people that own shares and ETFs and such.
Yeah.
So if you're then getting into funds and bank accounts and bringing that together, obviously it gets larger.
Yeah.
But essentially our objective is to capture, a small percentage of those entry level users, which we believe over the next 6 years we can get to 1 million of those entry level users out of the, tens of millions that there are. And then we expect to get larger percentages of users that have higher balances essentially, and they're taking it more seriously, or they're kind of graduating, right? And they're like, okay, how do I now manage the drawdowns? Because guess what? It's all about managing your drawdowns. When Buffett's like, don't lose money, like, right, he's like, there are 2 rules, right? Don't lose money, and then rule number 2 is don't forget rule number 1. And what he means by that is basically compounding works both ways, and losing 90% of your portfolio is not great. Like, I actually did a little forecast where you could basically, if you avoid the bad years and do like marginally worse for the rest of the time, you still massively outperform.
So avoid the bad years, just stay off.
Yeah. So I wrote another memo called Drawdowns Matter.
Mm-hmm.
And like it really was about like, yeah, drawdowns matter. Liquidity's been drawn out of the market in 2022. And, you know, if you were a growth investor, you may have lost, you know, 70% of your value. That's gonna take years to come back.
So you don't just sit on it and hold it and hodl.
Again, it comes to your objectives.
Yeah.
You know, if you are really bullish on these growth portfolios and you're getting a 80% discount, like if you have that conviction, maybe you're happy. Maybe you're happy for it to stay flat for the next 5 years while you accumulate, you know, relentlessly every month.
Yeah.
I personally, you know, I'm obviously fascinated by markets, so I want to outperform.
Yeah.
And I recognize that drawdowns really do matter. So how do I protect, you know, my, you know, box of gems and make sure I lose as few as possible?
Yeah. I love the gaming analogy, mate. Hey, so where did your knowledge of the markets come from? Are you like schooled in this? Did you just self-learn?
I just read a lot of books.
Yeah.
Like I've probably read over 100 books in the last kind of 3 to 4 years.
Yeah. And what was it about the markets that interested you in the first place? Like, why did you direct your efforts to this space?
So when we got done with Uproar, I was like, well, how do I allocate my capital and get returns that are similar to venture, but liquid? And that then led me into public markets. And then I decided, okay, I've got to learn, I've got to understand, and that means that I have to learn from other people, of course.
Yeah.
So then I just went deep into different investors and also unrelated kind of books as well. You know, books on, you know, there's a book called Thinking in Bets, which is talking about how do you make decisions with the best information that you have possible and then be okay with the outcome. Like I can make a good decision or a well thought out decision, but have a bad outcome. And personally, what I'm trying to do, it's like that Solana short where we lost 50K. It's like, am I okay with that decision that I made at that time? And I am. I'm still happy. You know, I'm not happy that, you know, we lost 50K in that trade. I'm happy that I made that decision and I had a well thought out process of doing it. So the thinking of bets is about not getting too disheartened by the outcome. Like if you're always focused on the outcome, then like it's going to be really rough. Whereas if you're focused on, I made a well thought out decision, or, you know, and executed it, and that's kind of done, right?
Is that just changing the narrative from saying, or the vernacular from saying decision to bet, like from bet to decision, you know, like...
I mean, we're always, like, that's what esports taught me, right? It's like we're making a bunch of decisions without incomplete information.
Yeah.
I don't know what the person across the table from me is going to do in the situation. I only know what I can see and what I know from history, I guess.
Yeah.
Again, same with startups, right? If you make too many decisions, you get decision fatigue, and you're making decisions maybe like for the sake of it. Like we make hundreds of decisions, maybe even thousands of decisions on a daily basis, but it's 2 or 3 decisions that really matter.
Yeah, indeed. Hey, so I want to come back to something you said before. You said you're a student of history, right?
Yeah.
And I've been telling people, like, we're in this weird position at the moment where tech's resetting a little bit and the likes, and I don't want to gloss over it because I've talked about it a bit on the podcast, but I keep saying to people, look, if you're looking back 20 to 50 and 30, you know, years, or even if we just look back over the last 20 years in technology, this thing happens, right? Technology needs to reset every now and then. It's like a market almost. It's
railways were technology at one point, right?
Yeah, exactly right. And so I've always been fascinated by learning the past to be able to educate myself for the future. And so how do you develop the knowledge? Like that Medium post, I'll come back to it again, right? Like it was written in 2021 and I was reading it last night going, holy fucking shit, you know, like where did you have this foresight? Because you literally you could have written that yesterday.
Yeah,
you know?
It's crazy.
Mate, it was so good, you know.
It's probably the best piece of work I've done. I think in, you know, in my life.
Yeah, look, we'll put it here, Jono. This is right here for people to go off and see, but it's in the show notes as well. I encourage you to read it. But how do you get to that space in self-taught, in a couple of years and then going back and thinking about, past,
I have an interesting kind of perspective from kind of taking that lens of technology. And the topic of the podcast was how to fight inflation in a deflationary world. So how do you deal with, inflation that you have in the present in an environment where there are lots of deflationary forces, AI, automation, and so forth. So I had a very interesting perspective of that specific topic where I had read a lot about what money meant and what interest rate and debt cycles looked like from a kind of markets perspective. And I also had a pretty good appreciation of what automation and AI could do. And that kind of allowed me to, with all of the research I'd done on George Soros and reflexivity, that gave me the confidence to, I guess, write that and talk about those different topics.
What do you mean exactly by peak reflexivity?
Yeah, so it's kind of touching on mimetic behavior. And mimetic behavior, the perfect example of it is, when you get a riot at a sports event, it starts generally from two people doing something or having an altercation, having a fight or something, and it just kind of escalates from there, right? And mimetic behavior runs markets, So now the expectation about AI and the excitement about AI is going to drive asset prices. Now, humans are, of course, are not stable, consistent creatures. We have to, because we have a problem with, how much information we can ingest, we do have to think in analogy a lot of times. We have to take information and kind of have like a very surface level opinion of something, and then we try and make decisions. And the market's trying to do that all the time. And what we're looking for in our strategy and how I look at the world is I'm like, okay, where is the expectations like divorced from reality? Like, what's a good example that's relatively recent? Well, a bank run is a mimetic and reflexive kind of situation where there's, fears about the bank, therefore people draw money. Or there are other places where people can put their money rather than a bank and get 0%, interest, where they can actually put their money and they can get a yield. So these reflexive kind of cycles where one user does it, therefore another user does it, and so forth creates like a reflexive cycle. And eventually the expectations and the euphoria basically means that asset prices may move too high or too low from the fundamentals behind it.
Interesting, man. Like, as I said, I could do a whole podcast on that blog alone. I think I've got like 14.
Soros has like 5 or 6 hours on YouTube about it. So, he's the guy that kind of started. And interesting about him is he, and as a character beyond an allocator. So I only really have a view of him as an allocator, not as a an individual person that does other things in the world that may have implications for all of us, right?
Yeah.
But as a asset allocator, I admire him because what he does is he is also able to jump into the bubbles and ride them up. And that's something that I specifically struggle with. Like if I know that something is wrong, or what is wrong, right? But if I think something is like, this is a bubble, I'm not the best at jumping in and riding it. I'm much more comfortable.
Is it just because of a moral compass, or? No,
not at all a moral compass. It's just, I like to have a margin of safety. I generally like to take like investments and take trades where I feel like the kind of downside is mitigated. It's asymmetrical, right?
Yeah.
Like interest rates at 0 and then, shorting bonds was a really good kind of trade because essentially where can it go? To 0.15 from 0.25? It can also go up to 5%, 5% plus. So that's a relatively asymmetrical trade. Whereas, you've got, let's say, Bitcoin at $28,000 right now in this moment. Where does it go from there? And where do I feel like I've got a margin of safety, or where do I feel comfortable, obviously, allocating? Right now, for me specifically, I'm not too bullish on cryptocurrencies and Bitcoin specifically, just because I like to invest long in assets that are productive. So they generate something. So that's why I like businesses, software businesses, other businesses that even if we traded in shells, someone would trade shells with them in order to fulfill a service, right? When I was looking at crypto, I would look at, I think there's a project called Helium, which is basically like a decentralized Wi-Fi network.
Yeah.
And I just simply went,
That's
okay.
the one with the IoT device that you would each buy, right?
Correct.
Yeah.
So again, I'm pretty bearish on crypto, to be fair. And that's because when I looked at Helium and then I looked at a standard business that basically fulfilled the same purpose, the difference in valuation was completely out of whack. It didn't even make sense. So
for me, it was like when I looked into it, I was like the logistics of it just didn't make sense to me, right? Like as a platform first, and then there was a whole NFT play I think they had on it, and there was like, and that's where I get a bit scared with crypto and the rug pull stuff, right?
Well, yeah. So and that's why, and you ask yourself, okay, this crypto project that's ran by 4 people has a market cap of $300 billion or $200 billion or $1 billion. What do comparative businesses that aren't relying on this theme trading at?
Yeah.
And what do they, from a productivity standpoint, what do they bring to the market? You know, Ethereum's kind of an example of a developer ecosystem that's providing a lot of services and products to the market. You know, what does that do comparatively to, I don't know, Steam or the Apple Store, right? Like, where's the fundamental productivity? What do people get from using Ethereum? And if the productivity makes sense, then, you know, if the level of value that network is giving to the market makes sense from a market cap perspective, I might be interested.
Yeah.
But if it's unproven and there's not actually that much usage, like I used to look at all the crypto games and I just look at the traffic. I just look at how is this $200 million project only getting 100,000 visits to its website every month?
Yeah. Well, there's lots of money that's gone into YouTube videos afterwards. With a lot of these crypto games, I can tell you, I'm enjoying them. My particular favorite was CoffeeZilla on Logan Paul's Crypto Zoo, whatever it was. What was it? I can't even remember now. But yeah, man. Hey, are we getting back to a weird world where it's just normal yields are going to be a thing, or is it like, because it's been just like insane yields over the last few years, people just making crazy money
in terms of appreciation of assets?
Yeah.
Well, yeah, it's because money was cheap, right? So the dynamic is simple. Like when interest rates are lower, investors are able to look further into the future. That's all it is. So, but the problem is the further you look into the future, the less accurate you are, right? I can see a world in 20 years where we are, going and mining asteroids, and we're bringing those minerals back and we're making electric cars, batteries with them, right?
Yeah.
I can see that in 20 years. Depending on how interest rates are, depending on my access to liquidity, I am able to look further in the future. There's an interesting dynamic there where, obviously, if every investor is only able to look 1 year into the future, I'm going to go and put my money in a 4% yielding kind of savings account, and everyone's doing that. Then I don't want to be there. Because for me personally, I'm a bit of a contrarian by nature. I like to look where no one else is looking. So I would then be like, oh, well, now I'm going to start looking elsewhere. But if everyone's really hyped about a specific asset and it's had huge appreciation, again, I kind of go, oof, I don't know if I should be there.
Yeah. And is that because you're worried about that bubble?
Yeah, I think that I think personally for us, we try to avoid bubbles. And
is that your gaming background coming into play, mate? Like, are you constantly, that muscle memory from being a professional gamer must come into play a lot with trading?
Yeah, for sure, because you're making decisions without incomplete information, and you can make a pretty well thought out decision and be completely wrong, or just it doesn't go the way you wanted, or it took a lot longer than you expected. I definitely think that plays a part, for sure, and we have internally within our strategy, there's 2 of us that run it, myself and a guy from Chicago.
Yeah. And
we have a internal kind of value, which is live to trade another day.
Yeah.
So we will just
the conviction to stay away from something that can potentially blow up in your face.
Well, it's never worth going to zero, right?
Yeah.
No matter what, in anything, right? You don't want to go to zero. So how do you live to play the game the next day? And the cool thing about investing is you don't have to take the, you don't have to take the pitch. You don't have to actually play.
Yeah. Awesome.
You can choose when you play.
Yeah. Hey man, this is really fascinating, and it's an exciting time for your product to come out. There's great companies like Sharesies and Hatch and all these other companies. Yours is another, like looking at through another lens.
That's right.
I think it's always great when we're seeing new products in the market. There's plenty of pie for everyone, and it sounds like your pie is very global from day one.
Yeah, we're focused on that.
Yeah, this product should be out now, right?
Yeah, I mean, you can sign up at Gembot.ai now, and you would join a kind of the early access. We really want to work closely with people that are passionate about bringing automation and AI into their wealth management.
Yeah. And when you say that, so this is something I was going to ask you before, right? So I'm very time poor, right? I want to be able to make better financial decisions. Yep. I want to make better investment decisions. But I also would love if this Robobot platform, it's got access to my bank account now, it's got access to this, that it says, all right, well, if you make some better decisions over here, Troy, you might be able to invest better over here. And so...
Well, if you've got if the system has the context, it can go, hey, Troy, you are on average 254 days early to trades.
Yeah.
That's an interesting piece of data, right? I have a Charlie premium. We have a Charlie premium in our strategy, which is that we will wait longer than we want to because we are typically late. We held our banking short for 9 months. We were wrong for 9 months, and then over 3 days we were right, and then we cashed out.
Wow, interesting, man. Interesting. So what do you want people to know about Gembot now that we haven't got across in the podcast?
I think what I would like people to consider is that, investing is not linear and the outcomes aren't linear. But if you can have a strong mental model of how, the world works and you're well informed, then you can make nice long-term decisions that help future you.
Yeah.
Right?
Yeah.
And not just Gembot, but having a plan and executing it over a long period of time, I think that's, getting the benefits of compounding is what you strive for in this game, right?
Yeah,
of
awesome.
Building wealth.
Yeah.
And that doesn't have to just be Gembot. That's also, all the products out there, including stuff like, Henry, for example. That is, democratizing access to accountants and, creating deflation in that area and taking care of a very important part of your life, in a very easy to use, well-priced application.
Yeah.
Same for us. We will, focus on how do we help you allocate, your internal family office, your personal net worth better, utilizing automation and AI.
Yeah. Have you met James from Henry?
Yeah, I had a few conversations with him. Yeah, for sure.
He's cool. Along well.
Yeah, totally.
Awesome, man. Hey, so that's fantastic, man. I really appreciate you coming on, Charlie. We were introed by a guy I know in the States who said, hey, Troy, I love your podcast. You need to get Charlie. He's a super smart guy. I met you for 5 minutes yesterday and I was like, fuck you, man. You got to come on.
Yeah, it's awesome.
So,
I really appreciate you having me on.
Hey, last sort of question, right, is I'm trying to share the knowledge and share little nuggets of information and tidbits with people that, in the show notes where they can go off and find something fascinating to look at. And so if you had to share some information, be it a book, a podcast, a website, a blog or anything, I mean, I would tell them to go off and read your Medium blog, but,
Yeah. It's a no-brainer for me. So Naval, you've probably heard of Naval, of course. He had his 3-hour podcast out, How to Get Rich Without Getting Lucky, which is not really about getting rich, but it was a snappy title to get people engaged.
Yeah.
And that, philosophy that he has kind of harnessed through other people's knowledge as well, really resonated with me. It's over 3 hours long and it's quite an investment of your time, but I've listened to it 3 times and I've got a different thing out of it every time. And I think if there's one podcast on this planet that would help people get to happiness, I think How to Get Rich Without Getting Lucky by Naval is absolutely the one thing that I would recommend to anyone.
I'm going to listen to that on the plane on the way home tonight, man. That sounds good.
It's going to impact you. Don't go to my Medium post, go to that, because that is fundamental kind of, thinking that is just next level.
And long form podcasts, right? When you can get 3 hours deep on a topic and learn, it's such a fantastic place for me to hear someone's, thinking over a 3-hour period or 5-hour period and the likes. And so, there's only so much that you and I can chat about within an hour, and I've tried to get through, touch so many bases, right, that it's hard to go deep. But
it is. I like it because it's unscripted, right? So you get the nuance and the kind of contextual aspects that you may not have got if it was highly polished. Yeah, and that's why I like long form podcasts too. Yeah, for sure.
Awesome, mate. Well, hey, awesome.
Appreciate having
Good luck for the launch. Yeah. I hope it goes really well. I think it's a fantastic product. It's a lot of us in the tech and investment industry are really excited by this stuff coming out. There's I think it's the next wave. Automation is here, and it's put your hands around it.
Yeah, it's definitely a platform shift, like the internet, for sure.
Yeah. Awesome, brother. Thanks for coming, man.
Thank you. Appreciate it.
Wow. I like to be the dumbest person in the room, and you got to witness that today. Fascinating conversation with Charlie. I love people that just go deep on knowledge. And so we've talked a lot about the 10,000 hours sort of technique in terms of getting skilled and becoming a professional in something. And I think Charlie's proof of that, like very smart, really well researched. I'm going to go off and watch that YouTube video or that podcast. I hope you watch that and read Charlie's Medium post. I hope you're enjoying the podcast. Season 2's back. We're in Auckland. We're getting lots of love up in Auckland. So thank you so much to Icehouse Ventures for hosting us again. Thank you for everyone that's following along and for subscribing. The subscribers are helping us to make this podcast bigger and bigger and better and better. And so thank you so much. And until next time.
This podcast is produced by John O'Tucker from Empire Films.